Is Vilamoura still worth buying into in 2026? Or are buyers increasingly paying for something that feels like value rather than value itself? Because those are not the same thing. And in this market, that distinction quietly decides whether you make a good decision or just an expensive one. Most people don't analyze Vilamoura, they experience it. The marina, the golf, the restaurants, the lifestyle, all of it feels coherent, established, high quality. And because it feels right, most people assume it is right. But that's not the same as asking the harder question. What actually determines whether Vilamoura is a strong long-term place to hold capital or simply one of the most effectively packaged locations in the Algarve? In this video, I want to break that down properly. Not as a tour, not as a sales pitch, but as a system. Because Vilamoura is not one market. And once you see how it's structured internally, the decision becomes a lot less emotional. For those who are new here, I'm João Capella. Before working in property, I spent 35 years as a mechanical engineer. And one thing engineering teaches you is simple. You don't judge systems by appearance. You judge them by performance under different conditions. That's exactly how I approach property markets like this. So instead of asking whether Vilamoura looks attractive, we ask what actually makes it perform over time. When I evaluate any location, I look at 5 fundamentals: scarcity, demand, liquidity, buyer profile, and risk. Let's start with scarcity. Scarcity in property is often misunderstood. Most people assume scarcity is about supply, land availability, limited construction, planning restrictions. And while those matter, they are not the full picture. Because true scarcity is not just about how much exists. It's about how much of it is actually interchangeable. Scarcity, in a meaningful sense, is about irreplaceable characteristics. Things that cannot be easily replicated somewhere else, even with time and capital. In Vilamoura, that includes elements like mature landscaping, golf-adjacent positioning, marina proximity, established infrastructure, walkable lifestyle pockets. These are not quick developments. They are the result of decades of layering value into a location. And once they exist, they cannot simply be rebuilt elsewhere. But here is where most buyers misread Vilamoura. They treat it as a single, uniform market. It isn't. Vilamoura is a collection of micro-locations with very different levels of scarcity. And this is where value begins to separate. I was recently comparing 2 villas in Vilamoura with a buyer. On paper, they were almost identical. Similar price, similar size, similar specification. At surface level, most buyers would see them as substitutes. But once you look beyond the property itself, the differences become clear. One sits in a mature, established pocket with stable surroundings and very limited potential for disruptive change. The other sits in an area where surrounding development patterns could gradually alter the character of the location over time. Nothing inside the property explains this difference. Everything important sits outside it. And that is the key point. Because in Vilamoura, scarcity is often not defined by the property itself. It is defined by the stability and irreplaceability of what surrounds it. And this is where scarcity becomes more important than most buyers realize. Because scarcity is not just about rarity, it's about durability. Which parts of a location hold their character over time, and which parts quietly evolve into something different. And in property, that difference is often what separates long-term stability from long-term uncertainty. Vilamoura has one structural advantage that many locations don't: diversified demand. It attracts lifestyle buyers, retirees, second home owners, investors, international families. This matters because it reduces dependency on a single buyer type. Markets become fragile when demand is narrow. Vilamoura benefits from being broad, but there is a deeper question worth asking. What happens to demand over the next 10 years? Nobody knows for certain, but we can look at the drivers: accessibility, infrastructure, international awareness, climate, lifestyle consistency. These are slow-moving variables, and they matter more than short-term sentiment. Now, let's talk about something most buyers still underestimate: liquidity. Not price growth, not appreciation. Liquidity. How easily a property can be sold when conditions change. Because a property can be beautiful, it can be desirable, it can even be rare, and still be difficult to exit. That's the part most people don't model. They assume strong assets are automatically liquid. But in property, that's not always true. Liquidity is not about how good something looks when you are buying it. It's about who is still willing to buy it when you need to sell it. And those are two very different markets. I've seen this play out before. Two properties, both considered premium. Similar price, similar build quality, similar positioning in the market. On paper, they look interchangeable, but they don't behave the same when they come to market. One consistently attracts interest. It doesn't necessarily sell instantly, but it always has a pool of qualified buyers. The other takes longer to gain traction, not because it's worse, but because fewer people actively want that specific version of the product. And that's the key distinction. Because liquidity is not about absolute quality. It's about breadth of demand. How many different types of buyers can reasonably see themselves owning it? And how quickly that pool reforms when sentiment changes. And this is where liquidity becomes more important than most people realize. Because when markets tighten, liquidity stops being convenience. It becomes control. Control over timing, control over pricing, control over exit options. And in property, optionality is often where the real value sits. Which leads to a more important question. Who is actually buying in Vilamoura? And more importantly, who will still be buying here in 10 years? Because a market is not defined by its properties. It is defined by its buyer pool. Vilamoura attracts a relatively broad mix of buyers. People looking for access to amenities, marina lifestyle, golf proximity, walkability, established infrastructure, international community. Individually, none of these are unique, but together they create something more important: breadth. And breadth matters because it reduces dependency. When demand is broad, a market does not rely on one type of buyer to function. It can absorb different economic conditions, different motivations, and different cycles of interest. But there is a more forward-looking question underneath this. Because what matters is not just who is buying today. It is whether that same buyer pool remains structurally present in the future. And that depends less on sentiment and more on slow-moving fundamentals. Accessibility, infrastructure investment, international awareness, lifestyle consistency, climate stability. These variables don't change quickly, and that is exactly why they matter. Because over time, buyer profile determines liquidity, and liquidity determines flexibility. And flexibility is what allows a market to function smoothly across different conditions. Now let's balance this properly, because no market is without risk, and serious buyers should actively look for it, not avoid it. The first risk is overpaying for the name Vilamoura, because once a location becomes established, branding can start to sit on top of fundamentals. And when that happens, it becomes easy to confuse recognition with value. The second risk is assuming Vilamoura behaves as a single market. It doesn't. As we've already seen, micro-location plays a critical role. And two properties that appear similar on paper can behave very differently over time. Not because of the property itself, but because of what surrounds it. The third risk is confusing emotional appeal with structural strength. Let me explain that. I've seen cases where a property creates a very strong first impression. Well-presented interiors, strong aesthetic appeal, immediate emotional response. Everything feels aligned at first glance, and that reaction is real. But when you step back and analyze it structurally, different questions start to matter. How broad is the buyer pool? How replicable is this type of property? How does it compare to nearby alternatives in terms of long-term demand? And what will future buyers prioritize that today's buyers might not fully wait? And slowly, the perspective changes, because emotional strength does not always equal structural strength. And this is the key distinction. Buying a property is an emotional decision in a moment, but holding a property is a structural decision over time. And those two things do not always align. So, is Vilamoura worth buying into in 2026? Yes, but only if it is understood correctly. Not as a lifestyle destination, not as a brand, and not as a uniform market, but as a layered system of micro-locations, each with different levels of scarcity, liquidity, and long-term stability. On the structural level, Vilamoura has clear strengths: established infrastructure, diversified international demand, broad buyer appeal across multiple segments, and a long-standing position within the Algarve market. These factors support resilience across cycles. However, these advantages are not evenly distributed. They vary significantly depending on exact micro-location, surrounding development patterns, and the depth of the local buyer pool. Which means outcomes are not determined at the level of Vilamoura itself. They are determined at the level of individual positioning within Vilamoura. From an investment perspective, this leads to a simple conclusion. Vilamoura is not a binary decision. It is a selection exercise within a structured market. And the quality of the outcome depends less on whether you are in Vilamoura and more on whether you are positioned in the parts of Vilamoura that align with long-term demand and liquidity. This is also where micro-location becomes the key variable. Because once you start comparing properties inside Vilamoura, you realize that most of the long-term differences are not explained by the property itself. They are explained by what surrounds it. I've covered that in more detail in the previous video, where I break down why micro-location often becomes more important than the property characteristics themselves over time. If anything in this analysis feels dependent on exact positioning within Vilamoura, That video gives the structural explanation of why that matters. If you are currently evaluating Vilamoura, the key question is not whether the area is attractive. It is whether the specific property you are considering will remain aligned with future buyer expectations, long-term demand patterns, and exit liquidity under different market conditions. Because those factors tend to matter more over time than the initial purchase decision itself. This is also why Vilamoura cannot be properly understood in isolation. It sits within a wider structure in the Golden Triangle, where liquidity, scarcity, and buyer behavior change significantly from one area to another. I've broken that down in the next video. The Golden Triangle liquidity ranking, where I compare Vilamoura, Quarteira, Val do Lobo, and Quinta do Lago in terms of liquidity depth, buyer pool strength, and exit risk. Because once you understand that structure, Vilamoura is no longer viewed as a standalone decision. It becomes one position within a wider allocation framework.